Well, I know it's Halloween, that's for sure, because home buyers are absolutely terrified of the housing market right now. And maybe this is you. Maybe you're a home buyer or prospective home buyer that's freaked out and scared about the housing market. You could also be a seller, a home seller who's like, hey, I don't know if now's the right time to list my property. Maybe you have some remorse that you hadn't listed it maybe last year or the year before. So maybe you're a seller that's terrified of the housing market. You could also be an investor, like me. I'm a realtor and investor, and there are parts of me as an investor that are scared about the housing market. So you could be an investor that's wondering, hey, is now the right time to get into real estate investing? Or is now the right time to sell my investment properties? You could also be a realtor. So you could be somebody, a professional in the market that's like, man, I really want to help my clients understand what's going on in the housing market. And so this video today, this live, is going to hopefully help you understand what's going on, because there's always changes, but man, the market keeps surprising even the most seasoned professionals out there. And we're gonna hopefully figure out what's happening. We're gonna unpack the latest Redfin data, and they just did their update today. They did their data update yesterday, so we're gonna unpack all the latest housing market data. And you know, we know, there's no doubt, we know that buyers, sellers, investors, realtors, people in the industry, we know people are terrified because the sales of the number of homes actually selling is way down. It continues to drop. It actually is up year over year, but barely up year over year. We're talking just a blip. So, it's really not anything to write home about as far as the growth of home sales. We'll probably only do like 3.85 million home sales this year, which is low. And then you also have days on market. Days on market is a lot higher. So you got days on market now, the time it takes for a home to sell, that's getting higher. So homes are sitting on the market longer, and new listings, those are down. So we have the number of new listings continues to drop. It's barely over what it was last year, which isn't anything to write home about either. So people who maybe want to sell a home and buy the next one, they're not listing their home. So the new listings are down. You can see it in the numbers, definitely. And so why is this? Why are we experiencing this in the market? We're going to attempt to answer that today. But one of the things that's clear is that interest rates are ridiculous now, right? They've gone from 6.11 to now, when I checked this morning, 6.92, and they'll probably go over 7%. So since the Fed actually cut rates, it hasn't helped mortgage rates. They've actually gone the opposite direction. And yeah, that's definitely adding to that definitely causes some of the fear and uncertainty. And then you got the election. A lot of buyers and sellers are like, I'm going to hold off, Jay, until the election's done. And then there's just overall economic uncertainty, I suppose. So, that's what we're going to go over today. My name's Jason Ferrier. I am a realtor. I'm an investor here outside of Columbus, Ohio. And welcome to my Redfin Live. Let's get started. So here's the agenda. We're going to do the national update and look at just national numbers. Then we're going to dive into the metro level numbers. And I have some metros that you all requested over the last week for me to do. I hope I didn't miss anybody, because there were a lot of them this week, which I appreciate, by the way. We've got Columbus, Cincinnati, and Cleveland. I always do those because I'm in Ohio. But then we have Connecticut, San Jose, New Jersey, Denver, Boston, Atlanta, and Las Vegas. So Connecticut, San Jose, New Jersey, Denver, Boston, Atlanta, Las Vegas, Columbus, Cincinnati, Cleveland. Those are the metros I'm going to do. If you have a metro you want me to analyze, put it in the comments today on the live. If I can get to it today, I will. If I can't, I'll do it next week. And if you're rewatching the live, put it in the comments and I'll get to it. So anyway, thanks for watching. Let's get started and take a look at the article, the Redfin article. All right. So I don't usually read the article before I look at the data. So I usually go to the data center first and look at the data and kind of formulate my own opinion before I read the article. But the article is it's interesting, to say the least, how they put this together. So Their title's hilarious. Home buying demand holds up even as election uncertainty, stronger than expected economy push up rates. So I'll let you decide if home buying demand is holding up. I'll let you decide. After we're done with this, you can comment and tell me if you think home buying demand is holding up. So they go on to say, I'm not going to read the whole article, just a few highlights here. Pending sales are up in 35 of the 50 most populous U.S. metros. That's true. Pending sales are up. That's the most in 3 years. So they're up year over year, but you got to remember where we came from. We came from the basement. So now we're like, maybe have the basement door open, but that's it. We're not out of the basement by any means in pending sales. It's just slow. The market's just really slow right now. Demand is also holding up at earlier stages of the home buying process. So they're saying, hey, demand is holding up because early stages of the home buying process, like tours of homes for sale, mortgage demand is holding up, but I don't see that happening. I mean, comment below if you see, early stages of home buying being tremendous. I mean, I just talked to a mortgage professional today, right before this live, and they told me that absolutely not. Buying demand is still crushed. It's just crushed. So mortgage applications are down. We'll see that here in a minute. And yeah, that's just the facts. I'll go on. I'll read the rest of this paragraph here. It says Redfin Home Buying Demand Index, a measure of tours and other buying services from Redfin agents, hits its highest level since May and is up 3% year over year. Right, 3% year over year. So it's like basically flat. And we really haven't seen, this looks at 4 weeks ending October 20th, this data. We haven't really seen the effect of the higher mortgage rates, at 6.92, but we will on that next report probably. They mentioned the election uncertainty, stronger than expected economy are pushing up mortgage rates. We understand that. Everybody's freaked out about the election, but that excuse is going to be gone here in a couple of weeks, right? In a couple of weeks, people won't be able to say, oh, it's the election. Can't say that after the election. There'll be another excuse though, right? There always is. I'm not saying it's an excuse, but it's an excuse that some people make, I guess. Higher mortgage rates have pushed up monthly housing payments to their near highest level since July. So something I didn't mention at the beginning, which is important, is that home prices, the median home price in the U.S. went up since the last report. It's actually gone up now, and it's at like $385,000. So that median home price in not only nationally, but in a lot of metros is stubborn. It's not cratering like a lot of people have been, thinking it would. That doesn't mean there's not deals out there, because there are deals out there, and there are opportunities. Now may be one of the best times to buy, actually, and I'll get into that in a minute. On the selling side, so this is for you sellers, new listings of homes for sale are up 2.2% annually, one of the smallest increases in a year. So this is one of the reasons why people are terrified, or one of the signals of people being terrified about the housing market, because new listings stink. I mean, people aren't confident about the housing market. If they were confident, they would list their home for sale and they'd be ready to buy the next one, but they're not ready to list their home for sale. They're like, nah, I don't think now is the right time. So they keep that home off the market. That new listing doesn't hit the market, and that hurts supply. So it's very strange environment. I'll read this little blurb here from one of the Redfin agents. There are buyers out there, especially for homes in desirable locations with highly rated schools and counties with lower taxes. Okay. But more buyers are negotiating on price. Asking for concessions and money towards closing costs. On my listings, I'm seeing a trend of buyers asking for minor repairs or cosmetic items. Many are getting creative with different types of mortgages, opting for an adjustable rate or a shorter loan period. That said, a fair amount of folks, both buyers and sellers, are waiting on the sidelines until the election because they feel a lot of uncertainty in the housing market. I mean, again, like the election is going to be here and it's going to be gone. And then what? And then everybody's freaked out about what? Something will come up. It always does. But I don't know. Comment below if you think after the election, there's going to be a flood of activity and buyers. There could be, but maybe not, right? All right. Now, what we're going to look at is the leading indicators. This is for the top line items like mortgages and home buying demand. So, daily average fixed mortgage rate 6.92%, highest level since July. I mean, if you're not in the business, it's not a huge deal, maybe. But I look at this every day, the mortgage rate, and I'm like, man, 6.92%. Like it was 6.11 just a few weeks ago. So it's definitely gone up. And that's down from 7.91 a year ago, but it could definitely go over 7% in the next few weeks. Weekly average fixed mortgage rate, 6.44. We beat that horse to death, so we'll move on. Mortgage purchase applications, folks. You got to pay attention to this one. This is that early stage home buying demand they're talking about. Down 5% from a week earlier. So early stage home buying demand is good, but it's down 5% from a week earlier. So it's not up from a week earlier. It's not accelerating, it's decelerating. It's up 3% year over year in mortgage purchase applications. Nothing to write home about. By the way, I saw a stat from the National Association of Realtors that said cash transactions are 30% of the market right now. 30% of the market. So people are paying cash more than I think they did last year. I think last year was like 26%, 28%. So, people were avoiding mortgages and just paying cash. Probably because of rates, right? A lot of cash out there on the sidelines, just tons. A lot more than people think, obviously. Redfin Homebuyer Demand Index up 7% from a month earlier. Okay. But mortgage purchase applications are down 5% from a week earlier. So I don't know. Their home buying demand index is kind of strange. Touring activity down 1% from the start of the year. Again, I can't understand how they think buying demand is back when touring activity is down 1% since the start of the year. And the start of the year was January in most calendars. So that would mean that that touring activity is worse than it was when it was freezing outside. I don't know. Doesn't seem like demand's, accelerated. Google searches for homes up 4% from a month earlier. All right. I don't know if that means a whole lot right now. That's not a huge uptick, but it's down 8% from last year. All right. Key housing market data. This is where we look at the top 400 metros and analyze or just look at the top line numbers from those top metros. Not all the metros, just the top 400, which is a lot of them that they look at. I think they look at like 900. So this is like half of them are around there. Median sale price, $385,250. Yes, it went up. It went up it's up 4.7% year over year. They say it's the biggest increase since March in the median sale price. So the median's that one in the middle, right? Line up all the houses that sold in the month or in the time period, and then you look at what the one in the middle sold for, and that's the median. Not the average, it's the median. Make sure my mic's working. All right, it is. Median asking price, $399,000. That's 6.1% higher than last year. Biggest increase in 2 years. That's what people are asking for houses. Again, line up all the houses. The one in the middle, that's what they're asking. Median monthly mortgage payment, down 4.6% year over year. So it's less than it was last year. But because rates have shot up and prices are stubbornly high, the median monthly mortgage payment isn't, dropping like it was a few months ago. It kept dropping and dropping and dropping. Now it's gone back up. Pending, and look at this. That's at a 6.44% mortgage rate. Now we have a 6.92% mortgage rate. So there's possible it could be flat versus last year. Like no discount on your mortgage payment. Pending sales, 75,000 units. These three next indicators are what you should pay attention to in your local housing market. Pay attention to these three things. If, the pending sales, how many or homes sold, either one. But here they give us pending sales, 75,000 units. They're saying that's the biggest increase in nearly 3 years, except for the period 4 week ending when they, except for the prior 4-week period when they increased 3.7%. That's only up 3.5% year over year. So we only had 75,000 units go pending. Not a lot at all. Now, the reason why prices may not have cratered yet is because new listings are only 84,000 units. You only have 84,000 units hitting the market in the 4-week time period. That's a difference of what, 9,000? So you've got a $9,000 delta there of new listings compared to pending sales. So that will increase active listings, but only by a little bit, because active listings now are right over 1 million. They've been at this number pretty much for the last few weeks. They're up 15.2% year over year. So active listings are up compared to last year, but not a ton compared to last year. And they actually highlight smallest increase since March. Months of supply, 4.1. I think that's the first time it's been over 4, I believe. But they're saying 4 to 5 months of supply is considered balanced. Maybe it's more like a buyer's market. It really is. It's really turned into a buyer's market in most areas now. Even though technically it's considered balanced when you look at the scale of months of supply. Share of homes off the market in 2 weeks or less, 33%. That's down from 38%. So homes are not flying off the shelf like they used to. Median days on market. This is the other thing I definitely pay attention to in your market. How long are properties sitting on the market? 40 days now. That's up 7 days year over year. That's a big increase, right? So homes are just taking longer to sell. Share of homes sold above list price, 26%, down from 30%. So there still are 26% of homes out there are still selling over list price. Believe it. That still happens. Average sale to list price ratio, 98.8. That's down 0.3 points. All right. So people aren't getting a massive discount in their price, but they're not paying on average over list price, which is good. All right. Now we look at the top 50 metros. We looked at the top 400 for that top line data. Now we drop down to look at top 50 metros, even shrink the field smaller, and look at where the winners and losers are regarding the top line indicators. So median sale price, this is where they're increasing the most. Milwaukee, Wisconsin, 12.8%. Fort Lauderdale, Florida, 11.7% median sale price increase year over year. Nassau County, New York, 10%. Providence, Rhode Island, 9%. And Chicago, Illinois, 9.3%. Where do they decrease the most? Austin, San Antonio, San Francisco. So they actually say here declined in 3 metros. So that means 47 of the top 50 metros are still, the median sale price is still higher than it was last year. It doesn't mean that the median sale price isn't dropping month over month. That's different. It just means that the median sale price today is higher than it was this time last year. That's what it means. Pending sales. So when a house gets a contract, it goes pending. When the buyer and seller, agree on a contract. San Francisco, Portland, Seattle, San Jose, Anaheim. Those all had the largest increase in pending sales year over year. Tampa, West Palm Beach, Fort Lauderdale, Miami, Orlando all had the biggest drop in pending sales year over year. Pending sales increased in 35 of the top 50 metros. The last time pending sales increased in this many metros was May of 2021. So, yeah, there are more pending sales than there were last year in many markets, in a lot of the top markets. But again, that doesn't mean that they're increasing month over month. It just means that they have more than they did last year. But again, last year was horrible. So it's some of these markets though, look at this, double digits, right? San Francisco, Portland, Seattle, San Jose, Anaheim, all of them on the West Coast, right? 3 of them in California, 2 of them in Washington. So it's like the Northwest, West Coast. Yeah, pending sales are definitely higher than they were last year. But like here in Columbus, pending sales are like, I don't know, 3-4% higher than they were last year, like nothing. New listings. Where are new listings increasing the most? San Jose, Seattle, Phoenix, Baltimore, and Anaheim. It's interesting to see how look at the pending sales and look at the common cities: San Jose, Anaheim. Yeah, those two cities are on both lists. So in those cities, you've got a lot of people listing their home and a lot of houses selling. So that's there's a lot more activity out in that market. Where are new listings decreasing the most? Tampa, Atlanta, West Palm Beach, Orlando, and Fort Lauderdale. That's where new listings are decreasing the most. I got to think a lot of that's hurricane related. I have to think it is. Um, I'm surprised that, and we'll probably see the data later on, maybe in the coming weeks, but I'm surprised like Tennessee, North Carolina isn't on there more. But we'll see from the hurricane if that had an effect. All right. So charts. This is where we look at the charts that Redfin puts out on the top line indicators of the top 50 metros anyway. Median sale price. So you can see here, it's going back up, right? It was headed down. Now it's heading back up nationally. A lot of people wanted it to end underneath 2023, but I don't put much stock in that. You know, national numbers are just national numbers. Everything really matters locally, but it is interesting to see that the median sale price is stubborn, really stubborn. Median asking price. This is what people are asking for homes. Now, a lot of this, because days on market has gone up the way it has, houses are sitting longer. This could be what I refer to as wish pricing. And I got that term from Mike Zuber at One Rental at a Time. So I can't take credit for it, but I like that term, wish pricing. I wish my house would sell at this price. Doesn't mean it will. You just wish it would. So somebody says, hey, I want to list my house, Jason. All right, we should list it at, we could, here are the comps. Where do you think we should list it, Mr. Client? Well, my neighbor got 420, so I want to get 425. Well, that's a different market if he sold it 2 years ago. So, these comps tell us maybe 390, maybe 410, but 425 may be a stretch. But then they go ahead and list it for 425 because the client's the boss in that situation. And yeah, you have to kind of follow what they want to do. And they want to list it at 425, you list it at 425 and nobody comes and buys it and you have to drop the price and then it ends up selling for, 385 or something. So maybe this is just wish pricing. That's why asking price goes up like that. Home buyer housing payments. Like we talked about, they're probably going to go up even more now that rates are even higher than what they're calculating. Pending sales, so look at this. You can see pending sales are like down, 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 down. They're threatening to go to a 4-year low in pending sales. So I don't know that demand is skyrocketing back. Doesn't seem like it. New listings of homes for sale, same thing. Look at the new listings, not improving. And this is where you're going to see the distress in the housing market. Like people waiting for foreclosures and short sales. Probably won't be a lot of short sales because of equity, but distress, like people who have to sell. Like I got to sell today or I'm ruined. Or, Airbnb sellers, like Airbnb uh, landlords or institutional sellers or investors, anything like that. You're going to see that in the new listings. If new listings skyrocket in your local market or even nationally, we'll know, hey, if these new listings are skyrocketing like that and nobody's rebuying, must be something going on. That's where you see the distress probably soonest, maybe in new listings. Because people will probably try to list their home for sale. If they can't sell it and they need to sell, they'll just keep dropping their price. Active listings. This again, so you can see new listings keeps going down. It has to go up in order to see active listings really increase. And active listings, while they are at a 4-year high, they're not like going through the roof. So this trend is like common in a lot of metros. You can just see it across the board, and you'll see it when we dive into them here in a minute. 4.1 months of supply in the market. So this is basically how long the current supply will last. The funny thing is, a lot of people will look at this months of supply and think that that is how much supply we have on the market. But that's not necessarily true because you also have to take into account the demand side of it. Because if nobody's buying the homes, but nobody's really listing that many homes, It just means the homes that are listed are sitting a long time. It doesn't mean we've had an explosion of inventory. Really. Hope that made sense because it can get confusing. 33% of pending sales under contract within 2 weeks. So that's a 4-year low. People aren't, homes aren't flying off the shelf like they used to. Homes sold in a median of 40 days. That's a 4-year high. Homes are taking a lot longer to sell. 26% of homes sold above final list price. That's a 4-year low. Thank goodness. So, people are getting some type of discount. Average home sold for 98.8% of final list price. That's a 4-year low too. So look at that way back when we were at like 102, right? Back in 2022, 102, 103, 103% of final list price. Wow. So there's what, a 5% delta there? People were maybe paying 5% less for homes than they were then. I guess you could look at it like that, maybe. Redfin Homebuyer Demand Index. This is their goofy way to calculate demand. They say it's gone up. I'm really confused why it's gone up like this. I'm sure my boy at Real Estate Mindset, Travis, if he saw this, would be like, manipulated data. I don't know if it's manipulated or not. I just know that it's not. It doesn't seem like demand's going up. It seems like it's worse than it was a couple months ago. So I don't know how they think it's going up, but whatever. It's their data. Okay, so that's the Redfin overview nationally. Now let's dive into the metro level data. And before I do, I'll take some questions or comments if anybody has any. Let me just move my screen here. All right. All right, let's see what people have to say real quick before I dive into the metro data. Dan in the Dirt. That's a cool name. Are you like a dirt guy? You sell dirt? Maybe you do. We are trying to buy our first home. As soon as rates skyrocketed up, I saw massive price cuts the same day. Yeah. Yeah, I think you'll keep seeing that, Dan. More price cuts. Sellers, I don't think sellers really got the memo yet. People are kind of conditioned that houses sell in like 2 days. And in some cases, they are still. Don't get me wrong. But I think people are conditioned to that. So eventually, sellers will get the picture and start pricing their house right. Thanks, Dan, for that. Coors Light, welcome to all that join the stream. Hey, yeah. Thanks, Coors Light. Welcome. I appreciate it. Oh, more from Dan. Our problem sellers won't fix anything to pass a HUD inspection. Yeah, that's a difficult situation to find a house, an affordable house that will pass HUD or pass FHA or VA or something like that. That's definitely not an easy task. So I don't envy you there. What market are you in? I'd like to know, Dan. What's up, Talus? Hey, I'm hoping these higher rates crush home values here. Yes, I'm sure you do. Maybe they will, but they may not either. They may just stay stubborn high unless there's more activity. You need more listings. You need more inventory. Yep. All right, let me see if there's anything else on here real quick. For those just joining us, this is Jason's weekly report review in Redfin. Oh, well, yeah. Thanks for the shout out there. All right. Oh, here. I live rural, so love ROB outside in the dirt working. Oh, great. Awesome. Good stuff. All right. Thanks for the comments, guys. I'll get to more here in a minute. Let me just dive into the metro level data. All right. So this is their data center. The link's in my description below. You can go here anytime you want, and you can search by metro level or county level in Redfin. Zillow, you can go to zip code level if you want. But in Redfin, they just do metro and county. All right. So we're going to do Columbus first since that's where I live or near it. All right. So I always do, how I do this is new listings. Then I do active listings. Then I do pending sales. Then I do median sale price on each of these metros. And again, if you have one you want me to analyze, drop it below. I'm happy to take a look at it. Columbus. Come on, Redfin. All right. New listings in Columbus, Ohio. Let me just make sure everybody can see my stuff. Yep. Okay. So we're looking at this top chart here, not this bottom chart. This top chart. All right. So new listings only up 2.2% in Columbus year over year. That's it. Just 2.2%. Yeah. People aren't listing their homes here. They're just not. They're not. Active listings. We'll do that next in Columbus. So active listings started to rise, but because new listings have just stunk, active listings are going sideways. They are up 18% year over year, which looks impressive, but still not enough inventory to really make a huge difference in our market. We just need a lot more, especially affordable inventory. Though I am seeing some affordable inventory hit the market here. So I'm not saying it's not here. I am seeing that. But like Dan said, um, it has to pass, FHA usually, right? And if it's just like a house that an investor bought maybe and like gutted it, and now it's like 100 grand, well, that doesn't really help a first time home buyer unless that buyer can qualify for a loan that will fix up the property. So that's that's kind of where the crux of the problem is. All right, so active listings now. Let me do pending sales. All right, pending sales. I mean, yeah, we're up 6.1% in Columbus for pending sales, but I can tell you, uh, as far as actual homes sold, we're only up like 2%. So just not a lot of activity in Columbus. Doesn't matter if you're a mortgage broker or a realtor or a title agent, you've got to be slow. Probably home inspectors too, probably, photographers. Those guys are all, probably everybody's slow right now, I got to think. Yep, no doubt. All right, pending sales. Now let's do median sale price in Columbus. Median sale price 340,000. That's down from 341. We peaked at 354 this year in Columbus actually. Now 340. It's dropped slightly. That could be seasonality. It could be, but um I guess the moral of the story is there's just not a lot of activity enough to cause any type of price crash, but prices aren't going up. They're not continuing to go up anyway, which is good. Let's hope they don't. I really thought Columbus would end the year at, 5 to 10% up year over year. I think I probably will be wrong about that. Nationally, I thought it would be 3 to 5%. And so right now we're at 4% nationally. So I'll probably get that one right, but not this one in Columbus. All right. Now, Cleveland, Believeland, Cleveland, Ohio. All right. New listings in Cleveland, Ohio, up 4.4%. Not a huge gain. Just like Columbus, it's on the struggle bus when it comes to new listings, active listings. Let's see how they are in Cleveland, Ohio. I mean, this is like shocking, right? Cleveland, Ohio, only 1% higher in active listings year over year, according to Redfin. So different than Columbus. We were up, what, 18%, 16% year over year in active listings. Cleveland only up 1%. Jeez. All right. Now, median or pending sales will do. Man, look at pending sales. Pending sales, hard to see there, but down 2.8% in pending sales. So, I mean, it's not even up. Most areas are up a little bit in pending sales. Not Cleveland, down in pending sales, but there's no inventory. There's like no activity. Now, median sale price, what's that doing? Could be seasonality. It's kind of trending like seasonality, but it's $221,000. Yes, you can still buy a home in the United States around $221,000 in Cleveland, Ohio. That's up 6% year over year, but again, it could be seasonality. We'll see how it does this winter, but there's just not a lot of activity. They peaked in Cleveland at 247 back in June of this year. So if you're in Cleveland, like I would pay attention to days on market. Let's look at days on market, by the way. I should add that in here. Let me look at days on market. Median days on market. That's hard to see. Let's see if I can get this. Days on market in Cleveland. In Cleveland. Up 5 days, 23 days is median days on market. So as median days on market rises, which right now it's basically flat, it seems like compared to the last few years, but watch those days on market because that may be where you can score a deal, right? Make some disrespectful offers. All right, Cleveland is done. Now let's do Cincinnati. Nasty natty Cincinnati. New listings in Cincinnati. Up 4.6% year over year. A little bit more activity than Cleveland and Columbus, but not a ton. Active inventory. Look at this. In Cincinnati, we've been elevated all year at 56% higher, more active listings than last year. 56%. I mean, that's pretty shocking, in my opinion. So, but it's flat, right? I mean, it's like not going straight up anymore. It's kind of just leveled off. Now starting to go down because new listings aren't amazing. But what's going on with pending sales? Pending sales up 9% year over year, but it's starting to head down probably because of seasonality. Always does this time of year. It's not a hot time of the market. But man, if pending sales stays, relatively low in a market, and then you've got a lot of new listings because of distress hitting the market, you could easily see active listings go up and prices come down. But most markets aren't acting like that right now. All right, so now let's look at median sale price in Cincinnati. 291. They peaked back in June, 306. There's a lot of markets that peaked, a lot of areas in the country peaked in 2022 as far as the median sale price, but in Ohio here, a lot of them peaked this year. So 306 was the peak. Now 291, still 6% year over year. And it's kind of gone sideways, but it's not crashing. That's for sure. All right, that's Cincinnati, that's Ohio. We wrap that up. Now we're doing Connecticut. So couple people asked for Connecticut. Let's do New Haven. Let's do New Haven, Connecticut. All right. New listings in New Haven, Connecticut. Down 8% year over year. Less new listings. That's a 4-year low in new listings in New Haven, Connecticut. Wow. All right. Now, what about active listings? Starting to go up, but it's right now at a 4-year low in active listings in New Haven, Connecticut. Down 5%. So unlike Columbus, that's up 18%. Or nationally, what are we up? 15% in active listings. New Haven, Connecticut's down. Down. All right, let's do pending sales. Up 7% year over year. So some uptick in pending sales. I wonder if like these jumps in pending sales, like right here, I wonder if that's when rates, let me look at the date on that. Yeah, I mean, rates were certainly lower then in early September. And then now they flattened off, right? Pending sales have flattened off as rates have come back up. All right, let's look at median sale price. Wow, look at that. Median sale price up 8% year over year. But remember, this is kind of lagging, right? You have to sell a house to record the sale and record the median sale price. So they're at 372. That could be, is that an all-time high? 381 looks like the all-time high back in August. But they're approaching the all-time high again in New Haven, Connecticut. All right, let's do one more. I'm just going to check the comments and see if that person's on who asked for that. They may not be. No, but somebody else asked for Connecticut. So I'll go ahead and do another one. Let's do Hartford. Let's do Hartford, Connecticut real quick. New listings in Hartford, Connecticut. Down 10% year over year. Wow. People are just not selling their homes in Connecticut. And again, like this is kind of trending to seasonality. If you saw this go woo right straight up, you got to think there's some pain in that market. But I think those the northeast markets are going to be very tight for a long time. I just think they will be. There's just not a lot of new construction either. A lot of people comment on my channel telling me, "Hey, I live in the Northeast, like Connecticut, New York, Boston, Rhode Island, New Jersey. There's like no new construction. It's all like custom, super high end new home construction because there's nowhere to build. So a lot of old inventory, I imagine, that has a lot of deferred maintenance, and that keeps the housing stock low. All right, active listings in Hartford down 6%, 4-year low in Hartford. I mean, see what I mean? Completely different than the rest of the country, even different than the Midwest. Pending sales, just like New Haven, kind of following the same trend. They're up 9%, but now they're heading sideways. They did jump up, I'm guessing because of rates when the rates dropped, right? Median sale price in Hartford, Connecticut, just like New Haven. Look at that, up 9%. Not a all-time high, but close. They were all-time high at 387 grand. Now they're up 9%. So Hartford, like the Connecticut Northeast market, is brutal. Okay, next metro. I've got San Jose. San Jose. New listings in San Jose. Look at that, down. It's dropping probably because of seasonality. I mean, you could see every year it does this little jog right here, right? Every year. But it's still higher than it was last year, 17.8%. I think they made that top list of metros in new listings. So they are adding more than last year, but the trend isn't higher. The trend is definitely down. And that's not good for active listings or price discounts, if that's what you're waiting for in San Jose. Active listings in San Jose was flat. Now it's starting to head down 26% more than last year, but it's not skyrocketing, not going straight up. Pending sales. Pending sales up 16% year over year in San Jose. Definitely a lot more activity, but it's trending flat now. All right, now let's do median sale price in San Jose. $1,585,000. That's obviously different than the other markets we've been looking at. It's like, wow, man, you go from Cleveland at 221 to San Jose at 1.58 million. But it's up 6% year over year. I mean, man, I wonder if this is when rates dropped, right? Yeah, I mean, rates were getting lower. They got into like the 6.11 range. I wonder if that's when everybody started selling, maybe. That's why prices are higher now. But they've gone up over the last few weeks. They was actually going down quite a bit, right? Where'd you peak at in San Jose? 1.667 million, up 14% year over year. Then it kind of went sideways and then right down to 1.5 million. Now back up to 1.585 million. All right. Huh. But it's still more than it is last year, and it's not crashing right now. And the person that asked for this, I believe it could have been this person or another viewer, said that they live in the Bay Area and they know a lot of people in the tech industry that are selling their houses because they can't afford the $10,000 mortgage payment. I mean, that's a lot to pay for a mortgage. I mean, if you have like $1 million home, that's what you're going to pay. But to somebody like me, that's just like out of this world, $10,000 a month in a mortgage payment. So yeah, maybe a lot of people are going to have to start selling. Let's go back to new listings real quick. Yeah, you're just not seeing it yet though in the data, at least not in San Jose, but we may in the future. All right, that's San Jose. New Jersey. So let's do, I always see this one on Redfin. So we'll do this. New Brunswick, New Jersey. New listings in New Brunswick, New Jersey, 12.5% up year over year. Not skyrocketing though. Doesn't seem like there's a lot of distress there yet hitting the market. Active listings, though, are flat, not amazing. They are up, though. I mean, Connecticut was down in active listings year over year. At least New Brunswick is adding some inventory more than they did last year anyway. But let's look at pending sales. Pending sales, 10%. 10% more than last year in pending sales in New Brunswick, New Jersey. Threatening to go below, though, like it's trending down, probably because of seasonality, right? People just aren't buying and selling as much. That's a tough market too. I got to think it is. Median sale price. Wow, it's kind of gone sideways all year, or most of the year. 6% up year over year, 546,000. New Brunswick peaked at 571,000 back in July, but now 546. So no crash in New Brunswick yet. I wonder what days on market's doing. I should have looked at that, the other metros, but I forgot. Median days on market in New Brunswick. Wow. Well, they had a weird hump, increase in days on market last year at this time, but nonetheless, they're down in days on market. Houses right now are selling quicker. What? It just shows you every market's different. That's just nuts. Wouldn't expect to see that, but there was this big uptick last year in days on market. So, but days on market's not skyrocketing upwards. In New Jersey, houses are still selling, it looks like, when they hit the market, like they did, pretty close to what they did last year. Okay. So we did that. Now let's look at I've got Denver. Denver. All right, what's happening in the Denver housing market? Well, new listings. Look at this. It's got to be like there's a seasonal thing going on here, right? Every season, these are just, new listings are going to go down. People don't list their home as much as they did when it's warm and nice outside. But man, this is just really what it was the last few years. It's only up 12%. Well, it is up 12%. So there are 12% more new listings in Denver than there was this time last year, but it's not skyrocketing upwards at all. People are just staying put, it looks like. Just staying put. Not listing, not buying. Active inventory, active listings in Denver, not skyrocketing, up 33%. But again, it's not like it's climbing. That gap isn't growing. That gap is holding pretty much steady. I would expect it starts to go down anytime now. It's kind of starting to go down now because of seasonality, right? A lot of that has to do with seasonality. Pending sales. Man, pending sales basically like it's up 10% year over year, but it really matches what 2022 and 2023. It's really, it's only 10% off of 2023. But way different than 2021. Look at 2021. The market was hot there. Now, way different. I mean, 972 pending sales. This time back in 21, Denver had 1,400 pending sales. That's a big difference. All right, median sale price now. Let's do that. Median sale price up 3% year over year in Denver. $594,000. See, this one peaked in 2022. So Denver peaked 617 back in 2022, and now they're at 594, but it's going back up. Again, I wonder if that's when the interest rates dropped, right? Activity picked up a little bit. Prices, people were able to pay the price that sellers were asking for. Let's go back to pending sales. There was a slight uptick there in activity, maybe when rates were lower. So median sale price is not crashing in Denver. It's not. And it looks like, it's been pretty even with 2023, 2022 for most of this year. All right, that's Denver out in the mountains, Rocky Mountains. Boston is next. Somebody wanted Boston. Beantown. Gotta love Boston. Boston's a great city to visit. A lot of these cities are awesome to visit. All right, new listings in Boston, Massachusetts. Look at this. It literally follows the same trend every year. Talk about predictable. I mean, every year, doot, doot, up, down, up, down. 8.1% up year over year in new listings. So there are more homes hitting the market, but um, it's not straight upwards. There's not a lot of distress. At least it doesn't show it in the new listings. Active listings in Boston, Massachusetts. Look at that. Same thing. It's got to be like a weather thing, right? I guess it just follows the same trend every season. Active listings are up 14% in Boston, but they're not going straight up. They're just following normal seasonality right now. Um, Pending sales in Boston. Where are we at? Oh, 8.3% more than last year. Again, pretty much following seasonality in Boston too. I'm looking for some pain in these markets or surprises, but most of this is kind of predictable in a way. All right, median sale price. Boston, median sale price up 4%. 711,000. They peaked at $768,000. Now it's 711, but again, following that seasonal dip and rise. But they've stayed higher than last year in median sale price all through this year. So again, they have gone down since the summer, but it's not crashing, at least not yet. So, and I would think Boston's going to be like the other areas in the Northeast. Not a lot of new construction. That doesn't help activity. I'm sorry, it doesn't help active listings, and it's not going to help sale prices as far as driving them down. You just need more inventory. And if there's not more inventory, it's hard to have a price crash. You got to have a lot more inventory than demand to drive down prices. You just do. All right, Atlanta is next. Atlanta, Georgia. Let's start with new listings in Atlanta. 4-year low in new listings. Look at that, 17%. You would think, I thought, well, maybe that's because of the hurricane. Maybe there's a big drop. There hasn't been a big drop. It's almost like it's been slowly declining in new listings since what? June? And every year it looks like it starts to decline and follows that trend. So it's I mean, that is surprising. 17% less new listings, fewer new listings than last year. 4-year low in new listings. Wow. All right, active listings. This will tell us a lot. Starting to go down. This has changed. This is going against seasonal trends. You can see new listings now are going down. They have gone down in Atlanta since active listings have gone down since August. But they're basically flat. Are they flat? Yeah. 0.15% down. Basically flat from last year, but headed down, where last year they were headed this way. So you're not adding more inventory. So I know a lot of people have picked Georgia and Atlanta as like the epicenter of some crashes because of investors and whatnot. Not seeing that. I know they are on the top list of investor areas where people buy, where investors buy, especially institutional investors. So maybe institutional investors, for some reason, have started to buy the inventory. I don't know. Pending sales in Atlanta, down 8%. So sales aren't improving. They've actually been lower all year. 4-year low in pending sales. So there are homes selling because active listings are going down. So some are coming off the market. It could be people delisting homes. I didn't mention that earlier. That active inventory, if it's going down, but pending sales aren't going up, it could be that people are just taking their homes off the market. Like, I listed it, didn't sell. I'll take it off the market, try again next year. That's not a bad idea sometimes. If you can do it and you don't need to sell right now, it's not a bad idea to take it off the table, reset, come back with a better price, maybe paint the house or, do some landscaping or something, improve it somehow. All right, median sale price in Atlanta. 4-year high, $398,000. They peaked at 418 back in June, not crashing, just sideways, barely up. They were almost under 2023 at one point in Atlanta with pricing, but they were only up 1% at one point. Now they're up 2%. No crash yet in Atlanta, at least not according to this data. All right, Las Vegas is next. Las Vegas, Nevada. New listings in Las Vegas. And if you're still on the live and you want me to analyze a market, just comment below and I'll take a look at the comments here as soon as I'm done with Las Vegas. And if anybody has a metro they want me to hit, I'll hit it on this live, or I'll hit it on the next one if you leave it in the comments on the replay. All right, new listings in Las Vegas, Nevada. Up 9.5%, but it is following some seasonal trends, headed down because people don't list as many homes in the winter. We know that in the fall. Active inventory in Las Vegas. Wow, active inventory increased all year. Look at that until now. They were down 32% at one point compared to last year in active inventory. Then they crossed 2021 and crossed 2023 and then crossed 2022. Actually headed under 2022. But now they're starting to level off and head down. Only up 27% year over year in Las Vegas. So it was a steady climb of inventory, though. How many did they add? They started at 6,800 units, which is a lot, right? At least it is for my area. And now they're at 9,000 units. So that is if you think about it, 3,000 more homes available on the market. It's a good amount. It is. So they definitely have more inventory than last year. Pending sales now. Pending sales, 2.3% up year over year, pretty much like it has been in 2023, 2022, right there. A lot less pending sales, though, than 2021. Look at that, back in 2021 with Las Vegas. Wow. 1,336 transactions at that point, and now you're at 663 transactions. Yikes. So it's kind of like Columbus. It's just stagnant compared to last year. All right, let's do median sale price in Las Vegas. Wow, this has held steady all year. Look at that. $442,000. It peaked at $452,000. They're right off a peak. They're right off the peak. They're not by any means crashed. Oh, no, I'm sorry. It peaked in 2022 at $456,000. And now they're at $442,000. So barely a difference. And remember, now we're in the fall, so prices are probably going to come down somewhat. But they're still up 6% year over year. So no crash in Las Vegas either. All right. Let me check the comments, see if anybody had another metro. Just looking through them real quick. Do Arkansas. Okay. Like Little Rock, maybe? I don't know. Let's try Little Rock, Arkansas. Try that. Little Rock, Arkansas. New listings in Little Rock, Arkansas. Down 4.4% year over year in new listings. Less than last year. That's not going to help prices stabilize, that's for sure. And now active listings are starting to go down. At this time last year, they're actually going up. New active listings were in Arkansas. All right, what about pending sales? Pending sales, 18% more than last year, but certainly less than 2021. So, yeah, I mean, you've got more pending sales, but it's not, it's 18% more. But we're only talking 249 units compared to what? 211 units. Not that big of a deal. I wouldn't call that any big problem necessarily. Median sale price in Little Rock, $244,000, but now it's going up again. Is that a peak? No, it's not a peak. The peak was $250,000 in Little Rock. So, yeah, I mean, let me go back to this real quick. You've got pending sales dropping underneath last year. You've got active inventory that's starting to head down, though it was higher all year. So it looks like there are more homes available, but not enough to cause any type of massive price correction. Kind of similar to a lot of the other markets where just not adding a lot of inventory. And so active listings are stagnant, if not dropping. It's just not helping that price come down at all. You need to see active listings going up like in a major way. Hmm. Okay. So let me go back to the comments and just see if there's anybody else. Anybody else have one? Dan in the dirt had a lot of comments. Yeah, you're welcome, Dan. No problem. Sales slow in winter and now high rates. Yeah, right. They do. And now higher rates are not helping pending sales. I mean, I do an open house every week somewhere and for a client. And the people aren't coming by open houses that much. And when they do, they're just kind of kicking tires, looking at the house, not in a hurry at all, which is probably the right way to buy a house, right? You don't want to be in a hurry. You want to be able to look at a house 2 and 3 times, heaven forbid, right? So now if you can look for a house 2 or 3 times, that's a good thing. So it is slower. Yeah, thanks. So I promised that I would explain, and I kind of did already, but I think it's important to reiterate the fact that there this is maybe one of the better times to buy a house right now. I know that sounds crazy, uh, and I'm not being a cheerleader at all. Uh, I'm not saying you definitely should buy a house. What I'm saying is that this market favors people that are willing to hunt for deals. You know, a few years ago, if you put an offer in on a house, you were beat 5 or 6 times by, or 20 times by other offers, by cash offers, by people paying way over asking, waiving contingencies, just going crazy and doing things that probably aren't healthy financially. So now you don't really have that, right? You kind of have what you wanted, which is not a lot of competition. Now, rates are higher, but that doesn't mean that your payment has to be higher than it was in 2021 when rates were lower. It could be that you can find a deal because there are sellers out there that do need to sell. There aren't a ton of them necessarily, but they do exist. And so if you do the work in your local market, so track days on market, track new listings, track them through Zillow if you don't have access to, a realtor, or call a realtor and have him pull the data, have them pull the data and send it to you on a regular basis so you can track the activity in your market and understand, hey, that house that I really like on the corner there, how long has it been on the market? Oh, it's been on the market 60 days. Okay. Well, maybe you ought to poke around a little bit and find out what's going on with the seller, and make an offer that makes sense for you. Don't make an offer that makes sense for the market. Make it make sense for you, and it's probably going to be disrespectful, but that's okay. And if you do that enough, you could probably land a deal at prices that are, 20, 30, 40% off what they are right now. That's possible. You just got to be willing to do the work to do that. And yeah, I got let me look at this comment here. If you want to buy into a market where home value shot up 40% in a short period of time, good luck. Well, right. Yeah, I mean, it's you do need luck, I would assume, but you also just need to do the work, I think, to find the opportunity. They exist. And by the way, you don't have to buy a house on the market. You can buy a house that's not on the market. And the way a lot of investors buy, or some investors buy, and the way I find deals is I drive. So I'll drive around neighborhoods, drive around areas that I want to buy in or invest in. I write down house numbers of homes and apartment buildings that look like they may need some help, maybe a lot of deferred maintenance. And then I just contact them and say, "Hey, are you interested in selling?" "No, I'm not." "Okay, I'll go to the next one." But some people are interested in selling. And so you don't have to buy something on the market, buy something off market. I mean, there are homes in your area that need help. You can tell. You can look at them and go, man, that needs some help. Like a lot of weeds growing around the outside, maybe, you know, uh, Christmas decorations up in July. that type of stuff. And you're like, well, there's something going on there. Contact the homeowner. You can knock on the door even. You can send them a letter. You can call them, whatever, and step outside the box of the MLS and the standard way of buying houses, because there are opportunities and there are people out there that are too scared to list their home. They don't understand listing a home and they don't really understand the real estate market. So you can contact them and say, hey, I'm willing to talk to you about buying your property. Maybe we can work out a deal and it could be beneficial for you and them. And believe it or not, a lot of people would prefer to sell off market and they'd love to sell to a homeowner, or an owner occupant versus somebody like an investor like me. So as a homeowner, you have advantages that investors don't have. So anyway, that's just some advice on buying a home. I think right now is a good time to look for property. You may be able to land a deal that you never thought you could. If rates drop too much, or if we get this price correction everybody wants, that may cause more competition in the market. And that won't help finding a home. So I would say now when people are running away from the market, maybe you lean in more to the market. Not saying you buy something today or you just run out and buy, but take the time to look. That's my advice. That's my advice. All right, Ken H. Hey, I haven't seen you in a while. What's up, Ken? If I work with a realtor and have a BAC, but I find a house off market and find the deal myself, am I on the hook for the realtor? BAC. Are you talking about a buyer agreement, I assume? Yes. Well, it depends. You need to read that. You need to read the language. I want to make sure I understand what you're saying. BAC. Yeah, buyer agreement. Okay. Yeah, you need to read that language because the language in the standard buyer agreement, by the way, that's a fantastic question. Great question. Yeah, if some of these agreements, the buyer agreements, and for those that don't know, the new real estate rules from the National Association of Realtors lawsuit basically says, all right, you have to sign a buyer agreement to see a house. You have to. If there's a house that's, if an agent's going to show you a house, you have to have a buyer agreement with that agent. That's a requirement. There is no getting around it. You have to. But in that buyer agreement can say anything. So the one that I use that's like standard says that if you buy real estate while you're in that agreement, you owe the commission. Even if you don't use the agent. Like if exactly your situation, Ken, if you sign the agreement as it is here in Central Ohio, the boilerplate agreement, then yeah, you're going to be on the hook for that. But you just need to read the agreement. So, and you can negotiate the agreement. So you could redline that before you sign it and say, well, I'm not going to pay you if I don't use you, or I'm not going to pay you if you don't help me find the house. You don't do anything. So be careful when you read that, review it, take it to an attorney if you need to, but don't sign it unless you fully understand it. But that's a great question, Ken. Yeah. You need to make sure you read that agreement. You can see any property as an unrepresented buyer. Well, I don't know where maybe you live in Arkansas, but in Ohio, if somebody wants to see a property, I have to have that buyer agreement with them in order to show them the property. Now, if it's an open house, I don't have to do that. But even if I'm the listing agent and an unrepresented buyer calls me, because this happens, and I've had to explain this recently to a lot of buyers, they still have to sign a buyer agreement with me for me to show them the house. At least that's how I understand it. And based on the real estate rules I've read and what my broker tells me, that's the way it is. And that's how the market's acting here. So yeah, I mean, in that situation, what I do is I fill out the agreement, but I make it good for one day and I make it good for just that property. So I try to do what I would want to, and I try to treat somebody how I want to be treated as a buyer. I mean, I could just have them sign the agreement, some unsuspecting buyer, and then they'd owe me a commission if they found a house down the street 2 weeks later. But I don't do that. I say, hey, if we're not working together and you just want to see this house and you're unrepresented, then I'll sign this buyer agreement with you just for one day, one house, so we can do the showing and you're not locked into anything that you're not prepared to be locked into. That's how I do it. And so you can negotiate those as a buyer. You can negotiate that contract to allow an agreement to make sure that you're not getting yourself in a buzzsaw later on. You can see. I'm just yes, property we make any realtor agree that it's reasonable. I'm not sure what that means. That's okay. But thanks for the comments. Thanks for the input and the questions. That's really good. Yep. So, moral of the story is we're gonna have to see after the election if buyers return to the market. I don't know if they will or not. Rates are high. They may go higher. I saw some comments, good comments in the section here about the 10-year rate on the treasuries. That's definitely been exploding. And listen, maybe I should have said this earlier. I'm not, even though I'm a realtor and investor, I have some experience, been doing it over 7 years now. I'm not without mistakes because I was going to refinance some properties, investment properties, when rates were dropping. And I got greedy and was like, well, I'm going to wait till the Fed cuts. I think maybe the 10 year is going to keep dropping. Wrong. 10-year went up. I lost. Now I'm going to refi to do some repairs on one of the properties. And now I'm going to pay 3/4 of a point more. Or no, I'm sorry, 0.375 more than I would have. So that was stupid of me. It made sense at 6.11. I should have locked it in then. I didn't. So now I'm paying for it, but it's easy to do. Anyway, thanks for joining me today on this Redfin Live. We went an hour and 10 minutes, but I appreciate everyone who joined me, all the comments, and we'll see you again next week on my Redfin Live update. I'm out.